GST Council meet. Remember, there was a lot of buzz about this council meet because it was being expected that the group would discuss a possible raising of GST rates on certain items. They have been stressed for revenues. Revenues have not been up to the mark or close enough to the target. States have been upset because they're not getting their compensation from the central government on time. So what have they decided? They've decided to fix a uniform tax rate of 28% for lotteries, both state and private lotteries. They've also decided to make uniform the tax rates on bags, woven and unwoven. But apart from that, the important thing is that there was a presentation which was made on how to augment revenues. There will now be further discussions on this. Sources have also told us that one of the things that came up was that there should be a 10% slab and a 20% slab instead of the current 3 slabs that we have right now. The bigger story, though, is what is happening inside the GST Council. The GST Council has been marked so far by an extraordinary bipartisan political bonhomie between central and state governments, even though state FMs are very often from opposition parties and rival parties. Are we going to see that continue at a time when the money is running out? To speak more on this, I'm joined now by MS Money partner at Deloitte India and Chief Economist of Care Ratings, Madan Sabnavis. But before I come to the two of you, let me quickly play out this conversation with Revenue Secretary Ajay Bhushan Pandey that my colleague Ruchi Bhatia had.
There is a law which governs the compensation. It says that the compensation has to be provided at what rate and from where the compensation has to be provided. So all those things, all those issues will get discussed at an appropriate time. The Compensation Act provides that if there is an excess compensation collection, then how that money has to be disposed of. It also provides that if the compensation collection falls short of the requirement, then what steps are to be taken. Those steps are to be taken by the GST Council.
We were hoping that the collections would be better, but that has not happened. What has gone wrong, sir, with the projections?
From this month onwards, from the December month onwards, where the money we will get in January, our collection has to go up to 1,10,000 crore. In the last month, we did collect 1,03,000 crore. So one is that we have to improve compliance, and we have to improve compliance so that we get the revenue. And if we get the revenue, then in that proportion, the compensation requirement also will become lesser.
This year, it's going to be for the second time that we will see the revenue number being being brought down in the RE exercise. You have already undertaken that exercise. You're meeting stakeholders.
No, as I have said that the RE, we are currently undergoing the RE exercise, and then we will make an estimate of how much revenue we are going to collect, and based on that we'll put that figure in the RE, and then also based on that we'll also project our budgetary estimate for the next year.
All right, so that's the revenue plan. Remember, yesterday you've had a task set out for the tax department that they have to bump up the GST revenues to meet target. In fact, they were told that all the GST revenues have to be above 1 lakh crore rupees for the rest of the months in this financial year for them to hit that target. It's happened only 4 times since April 2019, so it's not going to be very easy. Those are sources that ET now broke yesterday. The GST targets for next 4 months have to be 1.10 lakh crore per month, and 1 month has to be 1.25 lakh crore rupees. How are they going to do that is, of course, the many lakh crore rupee question. I'm joined now by MS Money and Madan Sabnavis to talk more about what's happening in the GST Council. Mani, let's begin with what the key takeaway is. And, like I said, this has been an unusually cooperative bipartisan forum, but we've been seeing very unhappy, angry voices for the last few days.
Look, I would say that all the meetings that have happened till now, till the 37th meeting, while the GST Council has a provision for voting, it has been there since the beginning, that was never required ever. And today we understand that in respect of an issue with respect to the lottery business, what happens to state authorized lotteries and state run lotteries, where there was a divergence of rate between 12% and 28%. Now, they have finally decided today that it is at 28% on all lotteries, irrespective of whether it's state run or state authorized. For this particular issue, I understand that there was voting which happened. Now, a voting per se is not a bad thing to happen because it's provided by the GST Council rules, it is provided by the law, and therefore, if a voting has to happen, it will happen. The only issue is possibly at some stage in future, we will need to take very large decisions in terms of the GST architecture. And when we look at the GST architecture as a whole, it is too premature to do that now. But maybe 2 years down the line, once GST settles down, that is the point in time where we'll have to relook at the GST architecture. Are we still going to have a 28? Are we still going to have a cess? That is what we'll have to take. At that point of time, we certainly need everyone to sit across the table and have a decision which is taken by consensus. Otherwise, things will become very, very difficult. As you mentioned, we are already looking at some kind of a slowdown in terms of GST revenues. We are also seeing a lot of pressure on the tax authorities to collect 1.1 lakh crore for the next 3 months and 1.25 lakh crore for the next month.
I'm going to come to the how this magic is going to happen, because I mean, tax collections have to be a function of revenues that various companies create.
Exactly. So it's a function of the GDP.
Yeah.
It's a function of what plays out in the business workplace. Now, in that situation, if the underlying businesses, so we have seen quite a few stressed businesses. So we have seen the telecom is under a bit of stress. There is a bit of stress on real estate. We have also seen some of the power companies going into stress. So there seems to be an underlying stress in various sectors. So if the sectors on which the GST revenues are collected do not perform well, how will the GSTs perform well? Because the GST is merely a number that comes depending on what happens at the underlying level.
Yeah.
So possibly there needs to be, and I'm sure the government is taking a lot of steps in respect of the underlying factors as well. So if those steps, take measures, if those steps lead to positive results over the next 3 months, yes, then we can certainly see an uptick in the GST collection as well.
Okay. We've spoken to a lot of state finance ministers this evening, and I'll play out some of those reactions. But before I do that, let me go across to Madan Sabnavis and your overall views. So now we're seeing a couple of situations, Madan. One is that states are not getting their compensation as per schedule because revenues are dropping. They have to decide whether to increase rates. It's a very difficult thing to do in the middle of an economic slowdown. And you have to get states and center to work together. What is the sense you got out of today's meeting on how these targets are going to be achieved?
So in fact, I think we should understand that GST is a consumption-based tax. And today we are saying that a major problem in the economy is slowdown in consumption. There's not much demand. So I think until this consumption or demand revives, only then will there be an acceleration in terms of tax collections. So as you had said in the beginning, collecting 1.1 lakh crores for the next 3 months and 1.25 lakh crores for the 4th month is going to be a challenge. It will definitely be better than what we had in the first 8 months because we are expecting overall GDP growth to be marginally higher than what we had, rates of 5 and 4.5%, and even consumption to pick up marginally. But it's not going to be substantial to get hold of these targets. So therefore, to my mind, I think there will definitely be a problem at the end of the year, but there could be a shortfall in terms of GST collection. Now, the more important issue as you have raised is about the center-state relations. And I think going by a consensus definitely makes a lot of sense going ahead. And I think the decision taken probably just on lottery, it's one particular product, so probably it's easier. But when you're talking of a plethora of products on which the rates will have to be revised, or we're getting into the business of saying it may be 2 rates or 3 sets of rates, I think it has to be done very carefully. And probably it's prudent that the GST Council has decided not to do anything just now. But I think if the center doesn't collect revenue, the states are also going to suffer, which also means that their fiscal comes under pressure, which will also mean that they may have to cut down on the capital expenditure, something which we're all banking on for the revival in the economy.
Well, let's also point out, in case all of you have missed it, the big market-moving ET Now story this morning on how the government may be looking at, a little easy on those fiscal deficit targets because growth is going to be the big priority. I want to play out for you what Kerala State Finance Minister Thomas Isaac has said after this meeting. Let's listen in.
They had projected the present trend in revenue and compensation payment over time and showed that over the 2 years it become unsustainable. It's very interesting to see central government thinks that the factors that affect the compensation, the GST revenues, such as the economic slowdown is going to worsen, or the compliance may not increase, which are very strange. But anyway, the presentation showed that the gap is increasing over time and the compensation such will not be available. States have been promised compensation if the revenue does not grow by 14% per annum. And that has to be honored.
All right, Mani, key point. So the target is there. You have to increase, the revenues, because these fights are going to keep getting worse as the money, if the money doesn't come in. So how are they going to do it? This is the tricky part, isn't it? Because this government has been saying that, we are against quote-unquote tax terrorism. We don't want to keep an interface between tax officials and companies. But then now they have this huge, ambitious target.
Look, I don't think it's impossible to achieve it. It's very difficult. It's undoubtedly difficult. I don't think it's impossible. So one is, if we see an economic revival, is going to make things much better. The other is
in the next 4 months.
In the next 4 months. In the next 4 months.
Yeah.
And with that, the other point is the government is intent on taking a lot of anti-evasion measures. What we have been hearing from them repeatedly is there are certain sectors and certain businesses which do not seem to be paying the appropriate amount of GST. In fact, in today's GST Council meeting also, if you noticed, there was one announcement which said that if anyone is suspected of issuing a fake invoice, in that case, the tax authorities have a power to block the input tax credit of the recipient. So blocking of the input tax credit of a recipient would typically, mean that they have the data available with them to know who are the people who are issuing fake invoices and which are the cases where there is a fraudulent availment of GST.
But wouldn't you have to prove that they're issuing fake invoices before you block
Absolutely.
the input tax credit?
Absolutely. So we are going to see a series of anti-evasion measures. I'm sure they are going to look at the e-way bill system very, very carefully. From next month, we are expected to have an e-invoicing system.
Yeah.
And the e-invoicing system is essentially an invoice which comes with a prescribed number which is generated by the tax authorities.
To wrap up, Madan, I want you to put into perspective how crucial the GST revenue stream is in the overall economic picture that we're looking at right now. We've seen a corporate tax cut. We know that there could be a fiscal deficit breach. Government needs to pump in more money. So how important do these GST revenues become?
In fact, GST is probably, I would say, the most important source of revenue. Because if we're looking at things like corporate tax collection, I think there are limits, because if the corporate sector doesn't perform well, you're not going to have those kind of collections. There are limits on income tax collections too, given the kind of structure which we have. So therefore, the thing falls more on goods and services. So we're talking of customs, and we're talking of what was earlier the excise and sales tax. So therefore, the GST, which subsumes everything under the excise and sales, becomes very crucial for us, not just from the point of view of the central government, but also the states. So ours is a federal kind of a structure. And I think both the governments, that is states as well as the center, are the ones which are actually driving the economy today. And if you don't get this kind of revenue, and you already have certain committed expenditures, it becomes very difficult to manage the fiscal deficit. And once you have to manage the fiscal deficit and your revenue is not increasing, the natural corollary is you start cutting down on capital expenditure, which again affects GDP. So I think it's fairly circular in reason, and we need to see the economy recover. We need to see these collections increase. Only then will we have a kind of a solution. But it's going to be a slow process, I can assure you. It's not going to happen this year, and it's going to take probably another year or so before things settle down.
Year or so, and this target is in the next 3 to 4 months. Well, it's an interesting story to watch out for. Thank you so much, Mani and Madan, for joining us this evening on this big story. Very short break, but don't go away. There's a lot more coming up.